You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome to Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging these days. Of course, check out all the new additions to the network, including, of course, make sure you check out the full network if you're ever listening to this. I know a lot of you out there love to mainline vol views in your ear holes, and hey, we love you all out there. But of course, there is more to be found. The network has 3 new shows just in the last 6+ months. So check it out, theoptionsinsider.com, on wherever you find your favorite podcast platforms. And of course, if you want to go above and beyond, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today, we were scheduled to have a special guest. It's like he's having some technical issues, which I'm trying to sort out right now as I'm hosting here, listeners. But while we're working on that, he's always special to us. None other than Mr. Russell Rhoads, now corrupting young minds over there at Indiana University. Mr. Rhoads, welcome back to the show, sir.
As always, thrilled to be here. Looking forward to talking about very little weeklies action, but I've got an update on that ridiculous Dees 220 put spread.
Oh.
So hold on to your hat. Hold on to your hat.
I'm intrigued. I want to start the show with that. But
No, we have to do things in order. There's a script.
You are teasing me. Speaking of teasing,
I am.
I do believe we are being
teased
in the green room right now by none other than the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir. It's been a while since we've talked vol.
It's been way too long. I had a class I was running at this time, so Andrew filled in my shoes, but I am back.
We all know you have no class, sir. You are a classless fellow if ever there was. But I'm glad to see you back here on the show. I do believe we have another guest wanting to join us. Let me see if I can work that out as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is lighting up the markets and indeed our tapes out there this week. We were, of course, off, no live show last week. So we're back and raring to go for 2 weeks. And it's been, this is usually the time of year where you could take a week off and you don't really miss much. August, heading into the dog days of summer, not usually a banger, but we have had some action. No small amount of that due to the madness coming out of all things DC. We're up, we're down these days. Tariffs are threatened and they're pulled away. Of course, we had hot inflation numbers, maybe not as hot as expected, but still pretty hot coming in on the consumer and the wholesale side. We got people making pilgrimages to DC to sell their companies. We got Putin and Trump meeting in Alaska. A lot of wild things going on. On top of that, sprinkle in a little bit of the secret sauce of earnings season. And you got a recipe for a little bit of action in the dog days of summer. We came out of the gate hot in the wrong direction, if you're Uncle Mike today, selling off in most of the major indices. We have started to swing towards the mixed. I'm sure if you wait 5 minutes, we might even swing towards the green. Dow up about 0.25%. S&P up about 0.2%. NASDAQ off about 1/3%. And our old pal VIX Cash, after spending a lot of time south of the 15 handle since the last time we chatted, listeners, hanging out right at about a 15 handle right now. That puts it down nearly 6 points, 5.75 points from where it was on our last show 2 weeks ago. And then our old pal, Mr. Nations, his volley, just the facts, ma'am, at the money vol, 11.75, so down about 5 points as well. And then our old pal, VVIX at a 97, down about 10 points from where it was on the program 2 weeks ago. All right, with the gang assembled now, let's go. I will go see if I can get our other guest in. In the meantime, Mr. Meatball, it's been a while since you've regaled us with some vol. Have at it, sir. What's catching your eye in the world of vol these days?
Well, I mean, this week has been completely driven by movements in Fed fund rates. If you look at kind of how rates have moved, short-term rates have moved over the last 3 days, it's been pretty dramatic. CPI, after CPI, the CME FedWatch tool actually had priced in about a 5% chance for a 50 basis point cut in September. And we were pricing in about a 50-50 chance that we had three rate cuts in 2025. PPI hits yesterday, all that goes away. We're now sitting from, we're definitely getting a rate cut in September to about 90% odds now. Markets basically have gone from, we're definitely getting 2 rate cuts where we were on Tuesday and Wednesday. And probably we're getting 3. 2, we're definitely getting 1 cut, probably 2, but probably not 3. And that's been kind of what shook the S&P 500 and notably the Russell 2000 over the last couple of days. The Russell 2000 absolutely screamed Tuesday and Wednesday as Fed fund futures were, pricing in more and more rate cuts in 2025, and then have basically given a chunk of that away over the last 2 days as rates have changed. And that's really what put the floor in the VIX. Now, VIX isn't exploding, but if PPI had come in line or a little bit soft, we'd be looking at a VIX that was 13 something, maybe 12. Instead, we're just kind of still sitting here right around 1485. And I know we're going to talk about the curve here in a little bit, but the curve is still really, really, really steep, especially in September. Like, if you think VIX is staying here, the opportunities in the volatility space are absolutely the best that we've seen in a very long time.
You're giving me PTSD with that VIX of 12, so I'm getting flashbacks. Once you hit 12, it's a quick stop there to the single digits, and then we hang out there like we did in 2017, and all goes to ruin in the vol world. But, I think we got him. He was enjoying the snacks in our green room a little bit too much, but pleased to welcome him on. Better late than never. Our good buddy, Mr. Euan Sinclair, hasn't been on the show in a while from Hull Asset Management over there. Of course, author of 1 or 2 tomes you may be familiar with as well. Euan, welcome back to Volatility Views, sir.
Hey, Mark. Yeah, it's been a long time. Thanks for having me back.
It's been quite a while, sir. How are things in the land of Hull?
Yeah, we're doing all right. It's been slow in the summer, but things have seemed to be picking up a little bit again now. It's always hard to get hold of RIAs in the summer. You know, the golfers there, the kids are on holiday, which to me would make it a good reason to go back to work. But, you know, I'm not these guys.
The Hamptons is calling their name, and they don't want to answer the phone out there. As I said, this is usually a sleepy time of year, but we have seen a little bit more action than you typically have heading into the dog days of summer. So I suppose there's something to be said for that. Like I said, it's been a while since you've been on the show, so let's start there. What's catching your eye in the world of vol these days, sir?
Well, this is something I almost never say, but I think vol's cheap.
Ooh.
So I think the reason the VIX isn't coming in anymore is it's already too cheap. Long options in the S&P space now are carrying really well. Now, not all of them, obviously, but you know the 40 delta calls almost across the entire term structure, but certainly at the short end of the curve, are cheap. You know, so I think that's one of the limits on the VIX. I think we're seeing an interesting, well, I don't know if it's interesting. It's the sort of, this is the reason. If you find it interesting, that's a different issue. We're seeing very low volatility on the intraday level. Like the markets are actually moving pretty smoothly, but we're seeing really big open to close and close to close ranges. So I think it depends very much how you're trading the volatility and what you're pricing it relative to. But, you know, we're moving a lot. You know, so people often think you should be buying vol if you're predicting a crash, you know, but a big move up on the day is going to help as well. And that's what we've been seeing.
Wherever our buddy Don Schlesinger is right now, his ears are burning. Someone's talking about buying vol.
But to Euan's point, look at how they were pricing the one-day straddle into CPI and PPI for that matter, right? You could buy the CPI for the end going into Monday night. If you wanted to play CPI, you could buy the end of the week straddle for like $50. The day before was, I think, $38. We moved 73 on Tuesday. You know, you and I and Russell, I know you'd have something to chime in here as well. What are your thoughts on whether this is somewhat related to zero DTE trading and SPX?
Yeah, okay, so it's always somewhat related, right? I mean, there's definitely an effect coming here. We definitely know the retail flow is largely selling, you know, 30, 35 delta strangles and buying the teenies. And if you look at the short dated options, I saw a study from Nomura a while ago, and it showed that the Sharpe ratio for buying 40 delta 1 DTE options was positive, but for selling the wings is positive. So we've got a massive butterfly effect, which is very much in line with taking the opposite of what retail's doing, which makes sense, right? But there's always other things going on, and we don't really have a huge amount of zero DTE data to sort of go back and compare, but it's absolutely an effect. I mean, there's cheap gamma there, right? So for the market makers, yeah, you buy short and then you get to pick what you want to sell long.
Yeah, that's the part we kind of often overlook, and people, even us, on the early days of zero DT, and everyone was saying, we were even half joking on the network that they were gamma bombs. It still sounds cool to say, by the way, gamma bombs. TM. It does. Trademarked by us, but buy the t-shirt now. But yeah, obviously the use case for market makers being able to buy these is kind of something everybody overlooked. I remember when I first talked to Henry about that flow, I think it was about over a year ago, and he told me over half of that flow was market maker to market maker. It stunned me. Then I thought, well, that makes total sense. You know, it's a perfect use case. If you're overcommitted in some area, you're short wherever, you need to get a little bit of a hedge throughout the end of the day or take some risk off. It's a great tool to do it. And all of a sudden, the old prohibitions of you don't want to trade with another market maker, that's gone. They're trading with each other all the time over there, which is kind of wild. And yet another crazy thing that has sprung up in this zero DTE universe. All right, Mr. Rhoads, sir, the last word is yours, at least for right now. What is catching your eye out there this week? And if you have anything that we missed from last week as well in the world of vol, have at it, sir.
Well, it's it's in the world of vol because it's the underpriced options. But I've been updating, looking at 1, 2, 3, 4, and 5 day at the money straddles, and across the board they continue to be underpriced. Which is over the 2 years that we've had all of those everyday expirations available. Not as much in the Russell area and the Nasdaq as the S&P, and it's not as bad as it was like in the first quarter of this year. I think a lot of systematic option selling folks got hurt badly in April and haven't come back quite yet. But just thinking about the shorter dated stuff and the impact on the longer dated stuff, I don't really. It's funny because I heard one of the SIBO folks on another podcast talking about how great it is for market makers to have all this liquidity in the 1 and 2 day options because it helps them be more efficient in pricing the longer dated options. Which we can see each other, and Sebastian is like nodding his head. No. I was like, because my understanding is that that the market makers are practically running 2 separate books with SPX, that they don't really relate to each other that much. So I thought that was kind of I don't think it has a negative impact on it, but I don't think it's having a positive impact on it either.
You don't use zero DTE to price your flex, Russell? What's going on with you, or your leaps?
I do not. I do not do that.
What's wrong with you, sir? But I want to keep going to the vol surface.
That's a long list.
Yeah, that's a long list. You're right. I want to keep going with the vol surface and everything else, but I want to take a quick detour. You and a little birdie told me a little while ago, and they've been whispering in my ear for a while, that you've been lured to the dark side of crypto vol. The folks over there at Amber Data have been telling me they've been doing some stuff with you over there. I'm curious, since the last time we chatted, obviously a lot going on in the crypto realm right now, a very volatile space. If you're kind of bored right now, if equity vol is not doing it for you, then certainly ETH vol can fit the bill for a little bit. What's been catching your eye? What are your thoughts, and what lured you to the dark side of crypto vol, sir?
Yeah, that was a very specific thing, and I really like the stuff they're doing over at Amber Data. I think they do a lot of interesting analysis as a data analysis company. And I bumped into a couple of the guys there, and they sort of ran a couple of questions past me, and it was just like an interesting technical project. The idea was, well, the question is, you don't have any single options on something. You know about options on other things. Give me a vol surface. And that's kind of a backward way of doing things, because normally the thing is you're pricing realized vol and then you look at the options and you see if there's a trade there. But they were saying, no, we want to come up with what we think a vol surface is, and how would you do that? And that was just like a really interesting technical problem. It was probably it's one of the problems I'm most proud of, I think. So it was a very specific thing. So I'm certainly not an expert on where vol is right now. As you know, in the US, it's pretty hard to be particularly active in most of the interesting stuff, although there have been a couple of on-chain exchanges popped up recently. So, I mean, they say you shouldn't access them from the US, but they don't block VPNs. So I don't think they really mind.
So you haven't been turned into a hardcore hodler. It was more of a interesting theoretical problem to tackle.
Yeah, absolutely. I think most of the guys in the crypto space are still nuts.
Well,
as someone who's talked to a lot of them, I would say there's a decent percentage that fall into that category. Yes,
I think that those Amber Data guys are pretty level-headed.
They're pretty. Yeah, they're the exception.
Greg's a real good dude.
They're the exception that proves the rule.
Oh yeah, Greg's great. I mean, and he's the one I was working with mainly. And
oh, good.
I mean, for them, it's numbers, and that's how I approach trading on anything. You were talking about interest rates before. I don't even know what the interest rate is. It's not my deal. And if you just look at the crypto space as a collection of interesting numbers that relate to each other, it's great. I'm more got an issue with the guys who think, they're preparing for the end of the world because they've got, a whole bunch of on-chain options, and it's going to be a very unusual apocalypse where they can still access Wi-Fi, but apparently they haven't quite thought that bit through.
You're not hoarding ETH for the end times, you and I. That's always been an issue.
Hoarding anything for end times, the thing this is what I always tell
bullets.
people: the most valuable thing in the world is a bullet.
Bullets. We just did that poll recently because this came up on our options bootcamp. We were talking about the utility or lack thereof of crypto in the end times. And we said we did a poll. What is your preferred apocalypse asset? We gave them, the hard assets of gold and metals, diamonds, I believe, crypto, and then bullets. And then, of course, the bullets won by a landslide. So our audience, they see the utility of lead when the end times is upon us. But interesting stuff. I just wanted to pick your brain a little bit on crypto because it is obviously so top of mind. Just wild moves going on out there, listeners. If you haven't been checking out the crypto rundown, by the way, if you want to hear Greg go crazy, Mark, listen to him when he talks about MSTU, that levered MSTR. That's a product solely for degenerates, and he gets super fired up about that thing. So if you want to hear him go crazy and get lured to the dark side, whenever I toss to him on MSTU, his eyes light up. Good. Check it out over there, listeners, on the crypto rundown. If you haven't, as we keep on rolling in the vol landscape, out to the vol surface. And spoiler alert, if you haven't been paying attention, listeners, vol has been taken to the woodshed old Yeller style over the last week and change out there. And the front portion of the surface reflects that. The AUG future coming in to start the show was down about a little over 3.5 points to kick off the show. SEP future not that far behind it, 2.25 points. If we go out all the way to the end of Q1, beginning of Q2 of next year, you could find about a 22.25. So there still is some juice. As Mark was saying, it's interestingly steep out there when you go from that front portion up. So an intriguing surface, to say the least, for this time of year. Euan, we'll start with you, sir. What, if anything, is catching your eye in the vol surface this week, sir?
It's going back to what I said earlier. I think the wings are expensive, and I think the meat is cheap. And it's been that way for a long time. And I know we're out of the guts of the earnings season, but I think this is one of the other reasons that it's a bit strange to me how cheap vol is when you had the worst earnings season for option sellers ever. And I've got data going back to 2007. And I think it's the first time that the majority of S&P 500 companies blew through their earnings.
Yes.
Wide earnings moves.
Yes.
So that to me, again, is like, I mean, vol's been cheap. I don't see why it won't continue to be cheap. And it's like, volatility is a very correlated asset day to day, right? So if vol's cheap now, I'm certainly not going to say, oh, that has to change and start loading. I would anticipate that being short the wings, long the middle is going to continue for quite a while, and mainly at the short end of the curve. The contango is pretty steep. You're talking about 22.5 if you go out, when did you say, 3 months?
Out to March or April of next year, yeah.
Okay, so what is it now, 14.5 in the cash? That's pretty steep. Yeah, it is pretty steep. So I think getting along the front end of the curve, if you want to sell something, probably selling it out maybe 3 weeks, a month.
Yeah, you're right. A lot to pack in there. We have talked about, in fact, our last show we did was with Matt from Orats. He crunches all of our earnings data for us, and we have been crunching that data now for at least 5+ years. It definitely goes back pre-pandemic, and you're right, this is the most explosive season we've ever seen in terms of earnings vol. Everyone has been asking us for years, what should I do with earnings vol? What should I do with earnings vol? And the answer is always, it's a crapshoot. It depends on the name. These last couple of cycles, it's been just buy it because it's been absolutely ridiculous. I think our season right now is averaging 130%, which is the highest we've ever seen. Obviously, listeners, 100%. And you can see all this data if you head over to the website, all for free because we like you folks. TheOptionsInsider.com. Click on the Options News and Articles tab. It's all there for you going back over half a decade now. And you can see our long-term average is about 119%, which is already insanely inflated. And then this season's coming in at 130%. So if every name moved as much as their straddle, that's 100%. So you're talking 30% on top of that. That is wild stuff out there. Mr. Rhoads, same question for you, sir. Do you see any wild stuff in this curve we're looking at right now?
Nothing terribly wild. Everybody's looking at the short end always, so I'm looking a little bit farther out, and that December-November relationship was standing out to me off and on, just because December's at about a quarter premium relative to November, and we usually see that divot that people start asking questions about, and we're not quite seeing that this year. It's not as unusual this far out as I thought it was. I just looked at the last 6 curves on the third Friday of August, and 2 of them we had December at a bit of a premium to November. And in both cases, that premium occurred when the futures were in the 20s. Which maybe if we come back down, if you think we're coming back down, and you got December at a premium to November, you might give some thought to shorten DEIS and going long November with the assumption that DEIS is going to fall at a dip if the curve comes back down closer to the spot index.
Mr. Meatball, the last word is yours, sir. What's catching your eye? And as you pointed out at the top of the show, a very steep curve, sir.
Yeah, I mean, the spread between, talking the short end. These August expires on Wednesday. It's trading over a point above. Now I know we're gonna have a little weekend of Friday. It's trading over a point above the cash index. That's pretty juicy. And September is trading 4 points over the cash. I could drive a Peterbilt through that. That is so wide. All right, it is. Normally, with the amount of time left to expiration, we got about 32 days. You'd be expecting to see 2.5, 3, maybe if because September tends to be a little more volatile. But like 4 points, they're like begging you to play this thing short. It's kind of tempting to. I got to be honest.
You're coming right back into the show. You're already getting lured into trades again, sir. This is why this show can be so dangerous, Euan. Watch out. You're going to be putting on some trades by the end of the show. Speaking of putting on some trades, let's see what folks are putting on right now out there in the world of VIX options, shall we? Is it a banger day out there? Well, it's not quite 1 million contracts already out there in VIX options land, but given this time of year and how light we should be seasonally, this is actually a pretty impressive number. Closing in on nearly 600,000 contracts already, 583. The ADV is 715. You could argue that's pretty high for this time of year as well. That's up about 39,000 contracts from our last show. So closing in on an already inflated ADV, that's nothing to sneeze at. Let's run through a quick top 10. Let's see what's open for size out here in VIX options right now. By the way, listeners, we are still hanging out 8-2 calls over puts. That's kind of been our magic number for a while. Cost you about 219,000 contracts to break into the top 10 in VIX land right now. That gets you to our old pal, the AUG 30s, followed by number 9, 221,000. If those 30s a little bit too far out for you, how about number 9, 221,000 of the AUG 20s? One of the more reasonable strikes on our board this week. Number 8, 239,000 of the AUG 42 halves, so right back to the fun. Number 7, 241,000 of our first of 2 puts, the AUG 17 puts. Those are sounding pretty juicy right about now. Number 6, 245,000 of the NOV 47 halves, so again, right back to the fun. Number 5, 282,000 of the September 35 calls. Number 4, 286,000 of the October 60s, so we're just putting a smattering of all sorts of interesting stuff into our top 10 this week. Number 3, 293,000 of the AUG 35s. Number 2, the other half of our put duo, 323,000 of the August 16 puts. And the number 1 size position in VIX options right now, 375,000 of the August 25 calls. But it's VIX options time. You know what that means, listeners. It is also time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, the song's so nice, we are legally obligated to play it twice. Your song fought me for a bit. It didn't want to come on today, but at last it was there. But what was catching your eye out there in the weekly VIX options flow, sir?
Okay, the first thing that caught my eye was there was not a single spread trade using weeklies that traded over 100 contracts last week. And that's the 100 contracts is the cutoff when I use Bloomberg to go through the activity. And there was not a single weekly spread trade. Everything is directional. And there weren't a whole lot of them either. On Monday from about 11:30 to about 2:45 Chicago time, somebody bought 5,500 of the August 13th, 16 calls. They paid 52 cents from them. It appears it was an opening trade. That's a terrible trade. They held it through expiration. VIX settlement was 14.27. The lowest VIX settlement in 2025. We did have a sub 14 in early December of 2024. So we have had a low settlement like that. I think it just seems like we've been stuck in high VIX settlements for some time. Also on Monday with VIX at 1571, somebody bought 2,000 of the September 3rd 55 calls and they paid 17 cents for them. I'm not rooting for them. On Tuesday at 10:45 a.m., VIX was at 1510. Somebody came in. I like this. Somebody came in and bought 2,900 of the VIX August 13th 16 puts for, let's say, 70 cents. Some of them were done at 71 cents, but so I can do easy math. Recall, settlement was 14.27. So these guys were worth $1.73. They got almost a double out of buying these things the day before. I'm seeing more and more activity the day before into expiration. I think I'm going to have to, I usually ignore the day before expiration. I'm going to have to go back and do some work on that.
It's all 0 day now, Russell. You got to get in right before.
I know. It's zero DT VIX or whatever. ZTVE. Victory and VIX execution. Now I'm having a brain fart. Don't do that to me. But about 6,000 of the 15 puts and about 5,000 of the 16 puts expiring on the 13th, traded on the 12th. And both had open interest kind of close to that. So they may have been trading out of it, but still lots of activity going into weekly expirations now. On Wednesday, VIX at 1461, we had somebody buy 400 of the September 3rd 15 puts for 13 cents. Got a nice negative time value on that. Within an hour with VIX at 1453, somebody bought 200 of the September 10th 15 puts for 16 cents. Again, a break even higher than where spot was at the time. With VIX at 1465-ish, this was done in a few blocks. Somebody bought 500 of the September 3rd 15 calls. They paid between $3.10 and $3.15 for those. I feel like there's somebody that likes to pay that price for weekly calls. I feel like I keep seeing that price when I'm on here. Kind of like 50 cents. So now we have Mr. 350.
For the weeklies, though.
Yeah, with the weeklies. I just feel like that 310 to 315 price keeps coming up.
So they like sacrificing to the market gods on a weekly basis.
Yeah, and we appreciate it. On Thursday, with VIX at 1508, somebody bought 200 of the August 27th 17 calls for $1. Maybe they're expecting a surprise this weekend or next. And then there was also a seller of 200 of the September 10th 15 puts for 12 cents when VIX was at 1472. Why don't do that? And then today, as of 11 a.m., there were only 5 trades using weeklies, over 100 contracts. And it looks like somebody was naked selling to enter a trade. About 2,200 of the September 24th 16 puts at between 35 and 36 cents, and they did that with VIX at 1480, which again, why? But is what it is. And the open interest on it was 20, so I'm pretty certain that was an opening trade.
2,200. They're not messing around on these.
They are not messing around. That's for probably the most illiquid weekly series. I think that's as far out as we're going right now.
Not getting a good spread.
Yeah.
And you teased this at the top of the show. You may have a resolution.
Oh, yeah. Thank you for reminding me.
Euan and Mark, you both missed it on the show. I believe Russell said about a month ago when we discovered this was his favorite, to quote you, your favorite VIX trade of all time. You think everyone should do this. Those were your exact words, right?
Okay. Yeah, I did a short video on Larissa and I's website, so you can see the entry stuff on that. But basically, back in the middle of July, somebody bought, let's say about 280 of the December 200 puts for $175.54 each. And sold the same number of the December 20 puts for $2.66. Basically a net cost of $172.88. They did this on the 11th and the 14th. Well, on August 4th, the open interest went down by 118 contracts, and lo and behold, both the 200 and the 20s traded at the same time. It looks like they exited just under half of this trade for at 173.24. So they made, basically, they've made a whopping 36 cents per spread. Part of me wonders if somebody's like, "Oh wow, we screwed up. It's not going to kill us."
They listen to the show, and
but
like,
we gotta get out of this thing at some point.
Yeah, the problem is somebody never knows. This could actually be against some upstairs trade that they're swapping this against. This would not be my preferred method of getting into a.
You and the name of your firm is Hull Tactical. Is there a tactical reason you could think of why you'd want to get into an over 100-point put spread in the VIX?
I mean, I've seen people do really weird deep trades before for interest rate considerations. I mean, it doesn't make any real sense unless literally that's the only product you can trade and you've got big carry on that one account. But yeah, I mean, this one, saying it's probably a mistake might be the most logical reason for it happening.
They kept it on for a better part of a month, though. That's the weird thing. Yeah,
they didn't want to accept the loss.
Well, maybe
right? Everyone knows when you do a dumb trade, you don't scratch, you just hang on.
Yes, you just roll the bones for dear life.
It took them that long to fire the guy who did it.
They're like, you did what? Yeah, when we heard that go up, we just all collectively scratched our heads. We've seen a lot of weird trades go up, doing this show for well over a decade now. That one definitely, in terms of just absolutely baffling uses of capital, that one is definitely up there. Just a ridiculously wide put spread. So there you go, listeners. Exiting, but only exiting half of it. They haven't seen the light of day on. They're still riding the rest, but taking off half of it. I love that. Means they want to keep half of it on. All of it makes no sense. Let's see if we can find some more sense for you listeners in the rest of the flow going up this week, such as it is. Again, not the most explosive week, but a decently active week given the time of year that it is. And we did have one day over 1 million contracts. I bet you can guess which day that was, listeners. Today, looking, like I said, pretty decently active, closing in on 600,000 contracts. The hot option out there today, 78, almost 80,000 of the 15 half puts. In fact, I do believe we have a flash poll going up for these right now because they traded quite a few times for about 40 cents. We said at that price, you like those? Are you a buyer or a seller? No verticals today. We're just going straight buying or selling. And nearly 90% of you want to buy those puts. I can't say, I mean, it's a little rich for what we typically see for like the 15 handle puts out there. But again, given where VIX is right now, it does make some sense. Number two, about 54,000 of the 15 half calls. Number three, 45,000 of the 16 puts. Number four, 26,000 of the 21s. And rounding out the top five today, the AUG 26 is an interesting strike. 20,000 of those going up exactly today. So some weirdo paper to be found yesterday, 613,000 contracts on the tape. The hot option, such as it was, about almost 41,000 of the SEP 23s. Number two, 35,000 of the SEP 20s. Number three, 35,000 as well of the NOV 22s. So maybe some rolling action there. Number four, 33,000 of the AUG 40s, excuse me. And number five, 27,000 of the old AUG 15 puts. Average price of nearly 20 cents for those bad boys. Are you in for those, listeners? We've been talking about those 15s forever, it seems like, and they're finally coming to fruition. Wednesday, 642,000 contracts on the tapes. That's kind of our baseline for most of the week. The hot option on Wednesday, about 54,000 of the OCT 20s. Number two, 32,000 of the NOV 22s. Number three, 26,000 of the October 23s. Number four, 23,000 of the AUG 20s. And once again, to the upside, number five, 16,000 of the September 40s. Tuesday, did you guess it, listeners? Yes, Tuesday was the banger day. A lot of action going up out there. Inflation driving what action we did see this week. 1.13 million contracts on the tape out there on Tuesday. It takes a lot to get you over 1 million contracts in the dog days of summer, and we saw it on Tuesday. The big dog out there, our old pal, the 15 puts, once again, 50,000 of those bad boys going up pretty much exactly. Number two, 47,000 of the AUG 16 puts. Number three, 41,000 of the AUG 45s. Number four, 40,000 of the SEP 25s, and rounding out the top 5 on a banger Tuesday, 36,000 of the August 18 calls. Back to Monday, no slouch, but can't really touch a million contracts. About 650 on the tape for Monday listeners. The hot option on Monday, 43,000 of the AUG 35s. Followed by number 2, 39,000 of the AUG 25s. I do believe we had some vertical action. In fact, I do believe we had a flash poll as well. I'll get to that in a second. Number 3, 31,000 of the AUG 18s. Number 4, 29,000 of the AUG 15 puts. And number 5, 27,000 of the AUG 17s. We did ask you earlier this week, I think it might have been on the option block on Monday. We saw a big print of the NOV 22 calls going up in VIX for $2.75 earlier this week. We said, quite simply, would you rather buy them? If you had to buy them, would it be part of a vertical? So sell something else against it. Would you rather sell them straight up or sell them as part of a vertical? And over half of you, 54.2%, wanted to straight buy them for 2 3/4. Thought that was a good value. 25% wanted to buy them as part of a vertical. That makes some sense as well. 21% not afraid to straight sell them, and no votes for selling them in a vertical, which is kind of interesting. Before I run on a little bit, Euan, you're out there in the land of Hull Tactical buying, as we discovered, very deep in the money VIX put spreads. Anything catching your eye in the world of VIX options these days, sir?
Nothing particularly. It's kind of weird, right? It's because, given where we are in the level of the VIX, VVIX is actually relatively high. So I don't really see any great benefits to buying options at this point. And normally I'd be, if anything, a put buyer. I just don't really want to be paying these premiums for it. So I kind of think right now there's not a huge amount of value in the VIX space. Obviously I could find something I would rather do than not if you make me pick something. But, I think sometimes we get too hung up on something starting from the bottom, right? We're like, oh, I'm a VIX options trader. What do I do now? And sometimes the answer is to start the other way around and look around the entire option space and find out where the edge is that way.
Yeah, you're right. It is deceptively low, the vol, but you're right. I broke down some of these premiums. They're not giving these away out there with the VVIX hanging out right around 100 like it is right now. Mr. Meatball, anything catching your eye in the world of VIX options this week, sir?
Yeah, well, my guess is that that wide spread and the high VVIX are kind of interrelated, right? So VIX is relatively low, but that future is at 18.5, not exactly cheap. So you've got players on both sides of the options, I think, playing it. So, I don't think the 17 puts for a 68 vol are that bad in, September. But when you look at upside, my screen, I have not updated my VIX vol since this morning. Everything is bid through my Theos right now. So there is, and it's all upside. Downside, not as much, but the upside, they're coming after some of this stuff. So I think they're a little worried about this, about the Fed, maybe some sort of weird Trump thing. Oh, we've got the Trump Trump conference with Putin in Alaska, which could be throwing some things out there as well. But to Euan's point, upside is not cheap. If you want to play long VIX, do it in a spread.
Now let's keep on rolling through the rest of the vol universe here. Listeners, I'll go out to the ETP land. Let's start, as we are wont to do, in the land of inverse vol. When we kicked off the show, we had our old pal SVIX. Surprise, surprise, vol getting taken to the woodshed, so SVIX catching the bid. 18.5 when we kicked off to show off the re-rack to see where it is right now. That puts it up nearly 3 points, about 2 3/4 points from where it was this time last show. And so a lot of you out there and a lot of our pro chat have been playing a lot of SVIX out there as well. Selling puts, wheeling, all sorts of strategies, just getting long. That also works right now out there in SVIX. So a lot of different ways to skin that cat. That ADV about 4,600, so starting to climb back up, still shy of 5,000 a day. So SVIX needs to get a bit of a lift out there on the old liquidity front. And just because Russell's here, we'll quote his beloved V yield, 2601, up about half a buck. Mr. Rhoads, what is catching your eye in those two uber sexy inverse vol products, sir?
Well, you keep picking on V yield, and I just want you to know that it's up 4.32% since it was launched, and SVIX is down 15.43% over the same time period. So you just keep it up, Mr. Man.
I don't think it's possible.
You just keep picking on my girl.
Is V yield? Is it possible for it to move 15%? Can that even happen?
It grinds higher. That's just what it does.
Oh.
It's kind of set up where because it's based on point changes in the futures and not percent changes in the futures, it's gonna survive the drawdowns better. It's boring. It's totally boring.
It's very boring.
But boring is not the end of the world, especially for people like my age.
Anything catching your eye in the inverse inverse vol aside from your regular defense of V yield, sir?
No, nothing terribly exciting. It is kind of nice to see that SVIX seems to be catching some legs and starting to work its way higher. And goodness knows I'm definitely, because you never know what's going to happen this weekend. I'll keep doing my UVIX thing where I buy it on Friday and sell it on Monday.
UVIX right now, since you invoked it, 14.25 when we kicked off the show, down a whopping 6.5 from our last show. So yeah, that's going to happen, listeners. They put a bullet in VIX. You're going to see that in UVIX as well. There are only 17,000 contracts on the tape when we started the show. I'm sure that's ticked up since then. The ADV is about 40,000 a day. That's up about 12,000 from where we were this time last show. Let me run through the rest of them here, and I'll get everyone's thoughts as well. UVXY, 13.5 when we kicked off the show, down 4.25 points, putting up 52,000 contracts so far coming into the start of the show. The ADV moving back in the right direction, 94,000 contracts. It's up 13,000 from our last show. And bringing up the rear, all of you have been waiting for VXX to kick its erosion into gear. Finally broke a 40 handle. I know a lot of you are hanging out much lower than that, but finally broke a 40 handle at a 39 even when we kicked off the show. That puts it down about 7 2/3 points from where it was this time last show. Putting up about 18,000 contracts today. Again, the ADV moving in the right direction here as well. 39,000 contracts a day. Up about 7,000 from this time last week. That said, Mr. Sinclair, sir, what, if anything, is catching your eye in the world of the vol ETPs these days, sir?
Almost nothing. I just would say to anyone who's playing the very common shorting game, I mean, we all know the risk of shorting, but I'd also caution people to check those borrow rates before they get involved. Those borrow rates can eat up an awful lot of that, but I got nothing specific.
You're not hanging out on the VXX 20 puts, hoping and praying, sir?
That's not really my game these days.
Someone, I forgot who it was, wrote in, and they were mad that VXX wasn't eroding faster. And I said, where are you on? They were on the 20 strike. I was like, okay, you have a long way to go before we start talking about 20 puts. But I digress. Mr. Meatball, sir, what is catching your eye in the world of vol ETPs, and how goes your inverse vol game, sir?
You know, to Euan's point, it's kind of funny. You know which one of these ETPs currently has the highest borrow rate? It's none of them. It's VXZ.
Oh,
the mid one.
Really?
Which is kind of interesting. Yeah, that one has the highest borrow rate out of any of them, which is a little weird. But yeah, I mean I got it. You know, I have not looked at my sheet today, but yeah, the decay in these is pretty aggressive. I mean, we talked about the width of the curve. If September comes back down to earth, and in August comes off, traders come in and sell it, and that spread drops $2.50, those ETPs are going to get absolutely slaughtered, and it'll be really good for SVIX, and it'll even help V yield. So and that is on the table. If this weekend turns into, if we get something positive out of this weekend with the way that spread is heading into August expiration, September could get absolutely thwacked.
Good time for your inverse vol newsletter, making up for lost time there a little bit, finally.
Yeah, absolutely. No. Yeah, I mean, the last 6 months were really an excellent time to be selling overwrites on SVIX because it really didn't do anything. Now it appears to kind of starting to behave. I would not be surprised if this thing starts rallying. It gets above 20. Those percentages relative to VIX movements start to get a little more teeth.
All right. Speaking of percentages, it's time for us all to give ours, listeners, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the most difficult, the most dangerous portion of the show. Last show 2 weeks ago was myself, it was Dr. VIX, it was Mr. Matt from ORAS, I should say. We were all prognosticating for last week, which of course there was no show. VIX closed around a 15 handle last show, 15.15. So spoiler alert, none of us had a 15 handle. Russell was at a 22.26. I was at 20 double. We were all feeling a little bit more juice. And Matt had a 19.5. None of us had this Vol-mageddon to the downside this week on our books, on our sheets. So aggressive stuff. To be fair, we were going out only 1 week, not 2 weeks, but still interesting stuff. That means all of us were losers this week, which means Euan, you get the dubious honor of getting to go first on the show. What are you feeling for our old buddy VIX Cash this time next week, sir?
I guess going first here is like teeing off first in golf, right?
It is. You got a lot of first tee anxiety.
Yeah, everyone gets to see me slice it into the woods. I think VIX is too low already. I mean, mainly vol is too cheap in the very short dates, but I think VIX, if anything, is going to go up, but not a lot. So I'll say 15.8.
15.8, pretty close to where we didn't guess on the show last week. And Mr. Meatball, I know you got a class coming up, so what are you feeling for VIX Cash this time next week? And then where should folks go if they want to check out all of your various classes and newsletters, sir?
All right, well, let's see. Where are we? We're currently 1480.
Do you remember how your palindromes work? It's been a while, sir.
Yeah, I do. I'm just debating 1441 or 1331.
Ooh, 1331.
So...
Damn.
You know,
don't even say that. Don't even speak that into existence. I mean, I'm short vol. I wouldn't be mad at it, but just I'm getting those 2017 flashbacks.
You know, we're gonna have VIX expiration next week. There's not a lot of news. No major earnings are. We got Walmart and Palo Alto. I'll go with the higher one of the two. I'm gonna do 1441.
13. I can't believe you're even thinking 1331. Just putting that out into the ether, sir.
You got to go for it. I was thinking about what my book looked like and whether I wanted vol to go up or down.
Yeah. I said, I wouldn't mind if you hit a 13 handle from a portfolio perspective. Theoretically, though, I know once we get there, wild things start to happen. Mr. Rhoads, I guess I was technically closer. I was the less loser of our last show, so I will go next. I will let you go last, sir. And yeah, everyone's already feeling a little bit of downside. I will play a little bit of the opposite game just for fun. I will say we get a little bit of a dust up just to keep us at these levels and a little bit higher. I'm going to say 1635. That also gives you a little over half a point breathing room, so you can't accuse me of carping them. All right, and last but not least, Mr. Rhoads, sir. I have bought you enough time. What are you feeling, sir?
I'll do 1550.
1550. All right, squeeze in Mr. Sinclair to the down, giving him a third of a point. That's respectable. All right, there's your market for next week, listeners. Mark doing his usual palindromic fun, 1441. Russell next higher, 15.5. Euan at 1580. And I'm playing the rear upside guy at 1635. Looking at our live chat here, we got people all over the place. Got some 15. The Queen's usually pretty prescient. She's at a 1503 right now, so even pretty much 15. Oh, Option God's feeling what Mark's putting down. 1435. A lot of them. Get your guesses in now. If you're listening after the fact, listeners on the podcast, just get them in today, the day the podcast drops. And then you too, if you're the closest within a tenth of a point, you too can win fabulous prizes. All right, that music means we've come to the end of another hour-long journey through the world of vol. Mr. Sinclair, you survived. How was it, sir? Did you have fun?
I nearly got through the end without messing up the yeah, I mean, as soon as I managed to finally get here, it was good time. Good talking to you guys.
I think you just like the snacks in the green room a little bit too much. We got to tell the producers, stop putting out the caviar and the steak tartare, because people are going to linger there. They're not going to come on the show. And if folks want to check out what you have cooking over there in Hullland, maybe check out a book or two. Where should they go? What should they do?
The best place would be to go to wholetacticalfunds.com. That describes what we're doing, and you can find links to the blogs we publish weekly there as well.
And you know, I have to ask, any books in the offing? Anything you're cooking up?
Nothing in the immediate future. I always say the last one is the last one.
Every author says that. Every time I finish a book, I'm done for life. That's it, right? And then they come on again 6 months, a year later, and they're working on a new book. It's a sickness, I think.
It's like having a baby. Really, once it gets far enough in the rearview mirror, like, hey, I think I'll do that again.
The smart people stop at one, and then the others forget.
Yeah.
They forget the trauma, and they go back to the well. Speaking of books, Mr. Rhoads, sir, I know you're cooking up a few. Any insight on when those are coming down the pike, sir?
I don't know. I'm afraid somebody in my house is going to hear what we're talking about and lock me in my office all weekend now that you brought it up. But
I apologize.
Hopefully, we're still working on it. Freaking, it's a book about Buffett and every time that they got out of stocks. And I think I've got everything together. I just gotta pull it all together into a tome. Is really where I'm at on it.
All right, and folks want to check out your musings in the meantime. Where should they go? What should they do?
Just follow me on Twitter. Anything. I'm still kind of working out something with somebody else to alter the way that I put opinions and everything else out there. But they keep pushing me out to when I'm allowed to announce what we're going to do. So there. Really informative, wasn't it?
Check them out. You know how to spell it by now. 2 S's, 2 L's, RHOADS, all one word. On your favorite social media platform. This is usually where I say this is going to do it for us on the on-demand side for the network, but that's actually a lie now. We have launched a new show in the last couple of weeks, so that will be coming to you on the on-demand side right after the closing bell. Stay tuned for the hot options report coming at you after the closing bell. In the meantime, if you're hanging out in the pro, stay put. We'll be back in a little bit to talk all the week's worth of unusual activity on options oddities. Spoiler alert, there's actually a lot, so should be a fun time. If you want to check that out for yourselves, you want to get live streams, you want to get access to a whole bunch of exclusive shows, you want to win the Pro Trading Crate like our member did, Mr. Unlimited this week, you want to get your name in the hat for the August Pro Trading Crate. Trust me, you want to win one of these in your trading career, listeners. TheOptionsInsider.com/pro is the place to go. Then we're back again next week with our usual array of content. Till we're back again next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.